So there is three types of cash flow. The first one is cash flow from operating activities.
Sir, in the exam, all the three would come together, right? As in one question.
Yes, but there may be a short type portion in which only investing activities or financing activities can be asked.
Or we just have to do the calculation, like the working note, net profit before tax, right?
Yes, net profit before tax and extraordinary items.
Yeah, we have to find that also in like single question.
Short,
In our
short.
in our pre-board, that question was there.
Okay. So you solved that or not?
Yeah, I did that.
Okay. 1 minute. Okay. So before doing cash flow from operating activities, there are three types of activities: investing and financing. So did we talk about what is financing, what is investing activities?
Yes, sir.
Yes.
Yes, sir, we did.
Okay. So I will cover first the investing activities. Okay. After that, we will financing activities, and in last we will do the cash flow from operating activities. Is that okay?
Yes, sir.
Okay. So what are the investing activities? So cash flow related with acquisition and disposal of long-term assets for investment is included or is termed as in investing activities, cash flow from investing. So when there is a portion of investing activities only, there is inflow and outflow. The inflow will be proceeds from sale of assets. Sale of fixed assets, you can say. And proceeds from sale of investment. What will be the outflow here? Outflow will be, the first one will be purchase of fixed assets in cash. So cash payment for purchase of fixed assets. Again, cash payment for purchase of investment. So here we are purchasing these assets and investment, and here we are selling these assets and investment. Cash payment for purchase of purchase of investment. Now, is there any other item that we have to include here? There is rent received, interest and dividend received. So these are the inflow of investing activities and outflow of investing activities. Please write these. After that, we'll prepare the format, how to solve the question, short answer type question.
Okay, sir.
Done?
Done, sir. Sir, now I cannot. Yeah, yeah, I can, I can.
Kritika,
Yes, sir.
have you completed?
Yes, sir.
Okay. So now let's complete our format part. So this is our cash flow from investing activities. Okay. So first of all, cash inflow, or you can say cash flow from investing activities. So cash inflow. So first item is proceeds from sale of fixed assets. Proceeds from sale of fixed assets. And then proceeds from sale of investment. After that, rent received, dividend received, interest received. You write the amount here and then total it. After that, we will write cash outflow. There is two items in cash outflow. One is purchase of fixed assets and purchase of investment. So payment for purchase of fixed assets. And then payment for purchase of investment. So these two items will be written here, and then the total of these two will be written outside, and we will deduct it from the this amount. So we will get cash flow or used, cash flow or used in investing activities. So this is only investing activity solution. Is there any doubt you have in this?
No, sir.
Fine.
No, sir.
Okay. So now there is one thing that these are very simple. Every items is given here and you write it here. But in some of the portion, you will not found some of these information like proceeds from sale of fixed assets or put payment for purchase of fixed assets. You will not see these information. So you have to calculate this information from the quotient, given information in quotient. Like you will be given the opening balance of fixed assets, closing balance of fixed assets, their depreciation, and the purchase is not given. So in that case, you have to calculate that. Okay. In the same manner, in operating activities, when we will solve the quotient of operating activities, maybe sometime you need to calculate the depreciation part also, because depreciation is not given in the quotient, but the information uh, indicates that it is depreciation. So you have to calculate the depreciation. So that's why rent received, proceed from sale of fixed assets or payment for purchase of fixed assets can be calculated by using the information given in quotient. But there is not no separate calculation for that. You have prepared already different ledgers. So in that case, you have to prepare fixed assets or you have to prepare investment account if there is information. So how you will prepare the fixed assets account and investment account? Like a normal ledger. So okay, let's say this is your investment account. And in the quotient, there is opening balance and there is closing balance. So there is opening balance and closing balance given in the quotient, and one of the sale or purchase information is also given. But the balance does not match. Like opening balance is, let's say, 1 lakh, and the closing balance is 2 lakh. And there is a sale of fixed assets, sale of fixed assets, sale of investment, it is 50,000. So credit side total is 2,50,000. So there is some missing information on the debit side. Yes or no?
Sir.
So it will be purchased. Yes.
So, sir, every time it would be cash purchase only.
No, it is not always. If there is information given in the quotient that
Yeah.
the purchase of investment is
Okay.
done on credit basis or by something else, then you will take that thing in consideration. But if it is not given, then you will assume that it is cash purchase. Okay.
Okay, sir.
Yes, fine.
Yes, sir.
Okay, so this is how you prepare your investment account. In fixed assets account, there will be some more information. Like here, it will be given depreciation in fixed assets. Okay, because there will be depreciation charged on fixed assets. So these are for example purpose. Okay. So if any of these amount is missing, then you have to calculate that. Is this clear?
Yes, sir.
Okay, so
Yes, sir.
let's see a question of investing activities, and then we will talk about financing activities. Sharing a question. Can you see the question?
Yes, sir.
Okay. So the first question is Mars Limited had plant and machinery whose written down value on 1st April 2019 was 9,60,000. And on 31st March 2020 was 10,50,000. Depreciation for the year was 35,000. In the beginning of the year, uh, a part of plant was sold for 45,000, which had a written down value of 30,000. Calculate cash flow from investing activities. Now, we will prepare the question. We will solve the question. But can you calculate the sale or purchase of machine during the year? The opening balance is given, the closing balance is given, depreciation for the year is given, and the asset which is sold in the beginning of the year is also given. So can you calculate the purchase or missing information in this question?
Sir, is it net cash used in investing activity?
Uh, we have to calculate net cash used in investing activities, but I'm saying to you that you have to prepare account like this here, the machinery account.
Oh, machinery, plant and machinery account.
Yes, plant and machinery account, and you have to find out any missing information if there is. Can you
Okay,
do
sir.
that?
Okay, sir.
Ritika? Okay, please try.
Then, sir.
Done?
Yes, sir.
Okay. So tell me the amount.
Yes. Sir, I did the plant and machinery account.
Okay.
I got the balance as 11 lakh 30,000.
11
The
lakh
balance,
30,000.
yeah,
Okay.
balance of the machinery account.
Okay. On which side?
Uh, both the side it's equal and balance is on the credit side, sir.
Okay. Ritika,
Yeah.
Sir, even I got the same answer.
on which side?
So credit side.
Uh,
So
10,
both
10 lakh
your
50,000 is
answers
the
are
balance on credit side.
yes, both of your answer is incorrect.
Okay. Is it on debit side, sir?
Okay. Okay. Let me show you the calculation.
Okay.
Okay. So you can see this is plant and machinery account. To balance BD on the debit side, 9,60,000. By balance CD is also given 10,50,000. Yes.
10 lakh, how much,
Have
sir?
there is this is
50,000. Yeah, balance CD was given 10 lakh
and
50,000.
okay. So balance, opening balance, closing balance, both are given here. And the depreciation is also given. Depreciation for the year was 35,000. So depreciation is written on the credit side
Credit side
as I have written
35,000.
in the format.
Yeah.
So depreciation account 35,000. Now we have sold our asset in the beginning. In the beginning of the year, a part of plant was sold for 45,000. So we have sold
Yeah.
our
So it will
plant,
be on credit side,
yes, by
bank
cash
account.
account, sale
Yeah.
45. But the written down value was 30,000. So we have made profit of 15,000. Yes or no?
Yeah. So profit and loss, debit side 15,000.
Very good. So to profit and loss, 15,000. Now, there is any other item left? No.
No.
So the total on the credit side is more than the debit side. It will
Yes,
be
sir.
Yes, sir.
how much?
Uh,
11
Uh,
lakh
what
30,000.
11 lakh
11
30,000.
30,000 is total.
Yeah.
Okay.
And
But
the
you told
balance
me
would
you,
be 1 lakh 55,000.
yes, 1,55,000.
55,000.
So where
The
you have
balance
made
would be on
mistake.
debit side.
Actually, it is not balance, sorry. It is, I told you if there is no information about purchase, then it will be cash purchase.
Okay.
So this is our fixed asset machine account. Ritika, you have made the same mistake. You have not written the balance.
Sir, no, I did everything, but I didn't do the profit and loss account.
Okay.
For me also, sir, it
Okay.
was
Now,
correct.
this you can see that in this account, there is only two information that we can use. This is in cash and this is in cash. Everything is just because audible.
Sir, your voice is cracking.
Yes, sir.
Now, am I audible?
Yes, sir.
So this is our cash flow. Investing.
It's cracking again, sir.
The Am I audible now?
Yes, sir.
Yes, sir.
Okay. So this is our cash flow from investing activities. And now cash inflow and outflow. There is one item in inflow, one item on the outflow side. So cash purchase, cash payment for purchase of plant. It is 1,55,000, and the outflow is sorry, no, it is outflow. Mm, yeah, this is not correct. Inflow is sale and outflow is purchase. So proceeds from sale of plant. It is 45,000, and cash payment for purchase of plant. Purchase of plant, it is 1,55,000. So the balance you'll get will be 1,10,000. This is cash used in investing activities. Okay.
Yes, sir.
You can write it in negative form also. Okay, now there is a next portion in the same manner, but this portion is provision for depreciation concept. You can see the question number 25 here. Machinery at cost 10 lakh and opening balance is 9,50,000. Accumulated depreciation is also given. So in this case, we have to prepare two accounts. Okay.
Okay, sir.
Actually, there will be three accounts. Also, we have to create patent account. No problem. So let's prepare the format. So now it is clear to you that how to solve the question from cash flow from investing activities. Or you find it easy? Yes.
What, sir?
My voice is breaking again.
No, sir.
I'm saying that uh, now you understood how to solve the question of investing activities, or is it clear to you before also?
Sir, it was clear to me before also.
Okay, so have you solved different questions of investing activities?
Yeah, I solved the full question, full-fledged question, sir.
Okay,
Yeah,
but
this
in
cash flow was
full-fledged
there for.
question, you don't have to prepare the accounts like this.
Yeah, we just have to prepare like operating activity different. Just the main,
Yes,
everything is given already.
yes. So this is in detail. So I think you have not.
I did, sir. I did few questions. Like in school, teacher gave homework of like operating activity, different question, investing activity, different questions.
Ritika.
Sir, I'm just learning it now.
Okay. So now in this quotient, we have three accounts: machinery account, accumulated depreciation, or you can say provision for depreciation account. Both is same: provision for depreciation or accumulated depreciation or patent account. Now, in the quotient, there is opening balance of machinery and closing balance. So first of all, let me write that to balance BD and by balance CD. To balance BD 9,50,000, and there is closing balance. So by balance CD 10 lakh. Yes. Now the accumulated depreciation account balance is also given 110, 150. So for him, the opening balance, okay, you are disconnected. So opening balance of accumulated depreciation is written on the credit side of accumulated depreciation. Okay, Ritika?
Okay, sir.
So actually, this accumulated depreciation concept is given in depreciation chapter in 11th. 1,50,000. You remember?
No, sir.
Okay. So opening balance of patent is 3 lakh and the closing balance is 2 lakh. So patent is assets. The balance BD 3 lakh and by balance CD. So we have written the opening and closing balance of every assets given. Now, additional information. During the year, machine costing 90,000 with accumulated depreciation of 60,000 was sold for 50,000. So we have sold our asset for 50,000 and the book value of that asset is only 30,000. Okay.
Okay, sir.
Because the cost was 90,000, means we have purchased it at 90,000, but we have charged depreciation of 60,000 already on it. So in the balance, if we find the balance, then it is only 30,000. So when this provision for depreciation account is applicable, you have to remember one thing, that asset is always shown at cost. Depreciation is not charged in machinery. Okay.
Okay, sir.
So if we don't charge it here, then where we will record it? We will record it here in accumulated depreciation account. So at the time of sale, we have to transfer the accumulated depreciation, that is total depreciation on any asset that is going to be sold. So total asset on that asset is transferred to asset account again. So here we will transfer the depreciation. So to machinery account. The accumulated depreciation on sold asset was 60,000. It is given in the quotient, so it will be transferred to machinery account. Here we will write by accumulated depreciation. 60,000. And we have sold it for 50,000. So there is a profit of 20,000. Okay. Is this clear,
Yes, sir.
or you confused for this?
No, sir, I got it.
Okay. Fahim.
Yes, sir. It's clear.
Okay. So now we have transferred the depreciation. We have calculated the profit and loss. Patent written off were 50,000, while a part of patents were sold at a profit of 40,000. So patent written off. Written off means amortization or depreciation, you can say. So by amortization account, it is 50,000. Okay.
Okay, sir.
And while a part of patents were sold at a profit of 40,000, means we have sold, there is total so 3 lakh was our patent, 50,000 is 50,000 is 50,000 is written off. This is amortization. So there is a profit of 50,000 also. So 3 lakh 50,000 here, 3 lakh 50,000 here, and we have sold our patent at 1 lakh. Is this clear?
Yes, sir.
Okay. So this is important for us to calculate our cash flow from investing activities. And now accumulated depreciation account, we have to close it. So the debit side is more. So 2 lakh 10,000 here, 2 lakh 10,000, and by depreciation, current year depreciation 1 lakh. So it's not for us in investing activities because depreciation is not in cash. Okay. So total sale of patent is 1 lakh, and there is, we have to close this account also. So 11 lakh 10,000 here, 11 lakh 10,000 here, and to balance, so to cash, this is purchase 970 and 1 lakh 40,000. So this is outflow. This is inflow 50,000 and this is inflow 1 lakh. So the net cash used, if we calculate cash inflow and outflow, in cash inflow, it will be proceeds from sale of machine, it will be total sale was made at 50,000. So 50,000 value, and proceeds from sale of patent is 1 lakh. And cash outflow will be purchase of machine. Cash payment for purchase of machine. It is 150 here and 140 is purchase. So this is cash flow from investing activities. Understood?
Yes, sir.
Okay. Now there is one thing that is important here, that this patent amortization of 50,000, if we prepare accumulated depreciation account, if it is written accumulated depreciation and amortization, then this 50,000 of amortization will not be charged in patent account. it will be written in this account. Okay, because whenever there is provision for depreciation or amortization, or accumulated depreciation or amortization is written, created, then we never charge our depreciation in the related asset account. We charge our depreciation or amortization to the accumulated depreciation account. So in that case, if we write this amortization in this account, then this cash amount will change. How it will change? It will be 350, it will be 2 lakh, and here the balance will be 150 as cash. Okay, so 150 cash. So here it will change 150, so it will become 2 lakh, and the balance will be 60,000. There's only one difference if it is written accumulated depreciation and amortization. Is that clear? Yes, Ritika.
Since I said yes, it's clear.
Okay, fine.
Yes, sir.
Okay, so this is your cash flow from investing activities. Now, please try to solve some of the questions from your book. And I have also shared this question you will receive. So, now, okay, so you have to do the question number 24, 26, and 20.